Nvidia, or NVDA, has many of the markings of an unrivaled investment. You have hyper growth, incredible profit margin, significant free cash flow that gets returned to shareholders. So a lot of folks are wondering, what do I think of Nvidia? What do they even do? We'll talk about that and more in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Nvidia. So Nvidia stock has just been amazing. A 10x in 5 years. Just one of the best stocks to own in the last few years. And the question is, what's driving it? And a key component aspect is with every stock, you always want to understand what drives the underlying performance. Is it, if you have a 10x, is that because fundamentals improved by 10x? Is that because the valuation expanded by 10x? Is it some sort of combination where maybe fundamentals expanded by 5x, but the valuation expanded by 2x. So there you have this effectively 10x potential. So you always have to consider, what are the things that move it, valuation versus fundamentals. In this case, you have a bit of both that's driving Nvidia's results. You see very strong expansion in their valuation, effectively folks saying, hey, I'm willing to pay more because I think their growth prospects and their profitability in the future will be even better. And so you can see how over the last 5 years, in this time period where the stock has done so well, their valuation expansion has gone up by 3x, from high single digits to around 26 times sales. And that is a key component. So a 3x increase in, let's say, valuation. But I'd argue an even bigger component has been their fundamentals. And last year alone, they posted incredible revenue growth, 60% plus, significant margin expansion, hyper profit growth, 87% growth in operating profit, nearly 80% growth in earnings. So just an incredible year. And so what do they do? How do we understand that? So what do they do? NVIDIA is a pioneer of the graphics processing unit, or GPU, which is used for massive parallel processing capabilities. In the words of NVIDIA, GPUs break complex problems into thousands or millions of separate tasks and work them out at once. That makes them ideal for graphics where textures, lighting, and the rendering of shapes have to be done at once to keep images flying around the screen. Now, historically, the gaming industry and its intensive graphics needs was the primary driver of demand. But in the past few years, they started tapping into several mega growth tailwinds across artificial intelligence, data centers, and anything that could leverage a potential digital twin. For example, the use cases alone lead management to believe that automotive demand, think cars, trucks, robotaxis, anything that could be an autonomous vehicle in the future, could potentially be up to $300 billion market opportunity that NVIDIA is tapping into. So while their gaming business is up significantly and represents nearly 50% of their business, the reality is they have several other segments that have shown a complete explosion in growth in the last few years, particularly around data center and professional visualization. Data center is their second largest segment, and you can see how over the last 5 years it's gone from under $2 billion in revenue to over $10 billion in revenue. Truly incredible. So what are my thoughts about this business? First, a quick plug where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies for both good and bad times, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those that are interested. Once again, that's unrivaledinvesting.com, click join the journey. And so as I think about NVIDIA, so they have this beautiful business model, designing chips while leveraging the physical infrastructure of chip makers or chip foundries like Taiwan Semiconductor and potentially Intel in the future. Now, this capital light business model, so they're not actually building the factories themselves, they're leveraging other folks that have the factories and then leveraging other folks that then test the chips to make sure it works. So they use that. And because of that, they have a capital light model that results in much higher margins and abundant free cash flow that they have historically used for mergers and acquisitions, as well as shareholder-friendly dividends and buybacks. You can see last year alone, they did around $8 billion in free cash flow. That's up significantly from the $4 or $5 billion in the prior 2 years. Now, when I think about this business, is it potentially unrivaled? I'm looking at 60% plus growth rates. I'm reading various different metrics that suggest they have industry-leading performance with their technology. This does suggest to me that NVIDIA is either unrivaled or has a very, very strong value proposition in really important sectors that could potentially drive growth for years or even decades in the future, decades to come. And as you look at the first quarter calendar 2022, management expects continued hyper growth, over 40% growth, for the first quarter of calendar 2022. So it does make me wonder, okay, so you have this strong growth, you've seen a stock price that goes up significantly, but what about their valuation from here? And, as you think about their valuation, you first need to recognize that the margins, the profitability for this business, has improved significantly in the last year. And so that is something that we may need to think about, learn more about in the future, where you've seen, yes, their profitability, their gross profit. So for every dollar, the profitability has gone from, let's say, 62 cents for every dollar to 65 cents. That's a nice uptick. But their operating profitability has gone from 27 cents for every dollar in revenue to 37 cents of dollar revenue, or 37%. And that's because they got significant leverage off of R&D, as well as, sales, general, and administrative expenses. So it does make me wonder how much of this is a one-time benefit, how much of this could be reversed in the future, or should we be thinking about 40% sort of as the new valuation threshold? And I don't have a great answer on that. It's unclear to me how much of this current profitability level they'll be able to keep going forward. Now, look, NVIDIA is clearly an amazing business that is enabling several world-changing technologies: cloud processing, autonomous vehicles, artificial intelligence. The question is, what's the right price for one of the greatest businesses in the world? You're looking at a business that's around 18 to 25 times sales, 18 times forward, around 25 times on a last 12 months basis, multiple. So around 20 times sales. Is that too rich when you consider that many of the other world-beating companies trade around 5 to 7 times sales? If you think they can grow at, let's say, 35% or more, I sort of pencil out a high scenario where, they're growing at 35% plus or more in the ensuing years. I have calendar 2022, then you compound at, let's say, 35%. And you're able to maintain, let's say, around a 40% profit margins. That's higher than where they were last year. And in 5 years from now, they trade at 30 times earnings. The stock could be an attractive investment based on that sort of layout, where you see 50% growth this next year, which is faster than they're guiding to for the first quarter. You see 35% annualized growth in the years after. You see higher margins than where they currently are. And you see an N multiple of around 30 times earnings 5 years from now. So if you see all those different things, then you're penciling out effectively 100% upside, a $1.4 trillion valuation versus their around $700 billion current market cap. That said, if it's anything short of, let's say, these hurdles, whether or not it's 35% annualized growth or 40% margin, in a sort of a base and low case, I'm saying 30 to 35% margins, 25 to 30% growth, 20 to 25 times end multiple in terms of end earnings multiple 5 years from now. If it's anywhere around this, then arguably you're looking at a very mediocre, sort of very lousy return, unsatisfactory return, if you're looking at a lower growth rate of closer to 30% over those next 5 years and closer to a 35% profit margin. So it is a question, and how does this potentially shake out in the years ahead? I don't have a strong opinion on this. I'm still learning about NVIDIA just because it is really interesting business model, very interesting growth, incredible returns for shareholders. Now keep in mind, this is a hypothetical valuation framework. And of course, stock price can go way higher or lower. A lot depends on sentiment. A lot depends on execution. And I'm very curious, what do you think of NVIDIA's? Have you made a large bet on NVIDIA's stock? Do you think it's going to go a lot higher or lower in the future? And if there's some key aspects to this business model that you feel like I've missed, I definitely want to hear about it, because I'm learning, and that's part of the Unrivaled investing community. We're all looking to learn here. And so if you have some insights into NVIDIA, feel free to comment it below in terms of either growth trajectory or some core risks that you feel like I might be missing. Thanks so much for tuning in. And if you like this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much.